Good morning, it's Patty Newby. I'm going to take an attempt to talk a little bit about what happened over the last week. So the mortgage industry on pricing and investors, where we get our money, all of us, Fannie, Freddie, Ginnie, kind of got turned on a dime last week. But the sky's not falling. We're going to have some tweaks. I think it's important to calm clients and let them know we understand and respect all their questions. But it's also good to have a little basis of where this change is coming from. I'm spending like 30% of my day just kind of trying to calm clients down a little bit, and I bet you are too. So a couple of things. I don't know how well you're going to be able to see this because of the light, but I think it's important to get it off, so I'll do my best to help out here. So on this paper, here's what it says. What happened? So investors that buy mortgage-backed securities and the bonds, which is our bond market, which is how rates are priced, bought mortgage-backed securities at 3%. They were selling rates at 4%. That's their profit. That's a good thing. What happened is when interest rates did a massive free fall, they're like, uh-oh, I just spent all this money, where's my profit? So good for the consumer, we get to refinance because rates are lower, but it has unintended consequences. So mortgage-backed securities, ooh, everybody's like, hey, I'm a little afraid, I don't want to buy. So the government stepped in to start buying mortgage-backed securities. Great news to stabilize everything. Now, instead of working off the 3% coupon, we're now working off the 2.5% coupon. So rates are going to be in those probably low threes because investors, just like if you were an investor, have to make a profit. That sounds fair, right? And clients don't really understand that. So secondarily to that, when investors start to lose money, think about if you were buying a share of stock and it automatically dropped 50%, would you want to continue to pour money into that stock? It's kind of the same way bond markets are. So what happens is investors get a little scared. So the non-QM world, went away, not sure what the market's doing. The jumbo world is really tightening up. One of our jumbo investors said, oh, no more, I don't want any more business, too risky. So what happens is the market starts to get a little weird, which is where we are right now. So what happened is when a mortgage loan officer or a mortgage is done, it takes 3 years for that company, let's call it a bank, Bank One, to make the profits on how to service that loan. So when everybody starts refinancing away, they're taking massive losses and they don't want to do that. So what's happening now? Some clients say, I don't want to pay points. Well, we have a really cool presentation where if you're staying in the house a few years, it's cheaper to pay points. My husband and I, we paid points because it saves us money. And this presentation, it's easy to illustrate so a client can pick what strategy they want. But here's what's happening. The investor market says, ooh, I don't want to refinance again. So typically in a normal world, the lower the rate, the more points you would pay, which makes sense, right? But here's what's happening. The investor says, I don't necessarily want to charge a client too much more money for paying that points. So let me give you an example. Now I need my glasses. On one investor on Friday, okay, 3.875 was giving a client an $860 credit. 3.75 was giving them a $649 credit. Now it's a lower rate. How does that make sense? It doesn't, but that's a joke. Nothing's making sense right now. But guess what? 3.375 is giving the client a $500 credit. And 3.25 is costing them $291. Now, so what do? We can drop the client all the way down to 3.25, woohoo, but they're going to pay some points, okay? So I think that's a good thing, but customers don't always understand that, so it's creating a sense of frustration and mistrust and just overall stress for us as professionals in industries. The other thing to keep in mind, it was awesome that the government did this assistance, this temporary assistance during this time. But depository banks, the big banks, are getting phone calls. I don't have to pay my checking, or I don't have to pay my mortgage. I don't have to pay my mortgage. And they're having to take that time to say, no, you do. It's just you're kicking the payment down the curve until month 4 to pay it. So that's making investors also afraid. Listen, I'm not the expert and perfect person, but we're not going to get into a 2008. We are putting underwriting guidelines in place now because we knew what happened in the future. But that is making that unintended consequences of what the government did. There's going to have to be a second phase of this. So pretend you're a servicing company. Pick a big one that you see online, for example, and they owe their investors who purchased the bonds, let's just say $5 every month. Well, guess what? The government said, hey, the customer doesn't have to pay their $3 for 3 months, but the servicing company still has to pay out the $5. So you're going to see big changes and maybe some more legislation coming from all these places that service their loan, 800 numbers, depository banks, because they're really in a pickle and there's unintended consequences. So here's what I'm asking my clients and you to help, just reassure the clients. We're trying to be calm. It's still a great time to buy a house, I believe. Rates are still awesome. 3s, low 4s, those are all great times, but we're just going to all have to be a little patient. It doesn't just affect the loan officer, it affects our title companies and our people going out that are signing them on the curbside, signing legal documents. It affects our appraisers and our inspectors. So we just all have to be patient with those third-party services. So I'm asking for your help. We're going to need it. We will get through this, and we're going to be at the other end celebrating and stronger mortgage industry because rates will stabilize and certainly America. Stay safe. God bless you, and thank you for your support.